Hello guys, welcome to a Trading Parrot. Shorts are getting decimated while at the same time we have formed a massive CME gap below the price. Longs are starting to take dangerously bigger profits in this area, so the question is, are we gonna make it into 120k, complete the V recovery, start entering banana zone, or could it be that there are some levels that we do need to respect now? Let's look into them. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes? That's something that only you can answer. Now, if you're looking for a new exchange, consider opening an account on 2bit. It takes just 2 minutes to open the account. You don't need KYC. You get access to all sorts of leverage and all coins, Bitcoin, everything. Now, if you want to get $50 for free to start trading even before depositing, then make sure that you use the link in the description. Then if you do your own deposit, you can get part of all of the 30,000 USDT trading bonuses. Let's have a look at the news. Bitcoin surges 3.4% past 115k as short squeeze wipes $373 million in liquidations. The US-China trade deal signals ease tensions, which is definitely something good for the markets. Remember, I do a separate video for general markets where we're going to look more in depth of what's going on in this week in terms of economical macro events, geopolitical tensions, and all of that. But just as a summary, we got the price at 115.4k, triggering a massive liquidation, not as big, of course, as the 20 billion that we have a couple of weeks ago. US Treasury Secretary Scott Bessent announced Washington is no longer considering 100% tariffs on Chinese imports. Of course, that's what they're saying this morning. Wait until the afternoon because they're gonna go for 200% again. Easing trade wars fears and sparking a risk-on rally. Global equities surge alongside crypto. Japan's Nikkei 225 crossed 50,000 for the first time, an all-time high in Japan. Korea's Kospi topped 4,000. Crypto fear and greed index shift to neutral now, out of the extreme fear and fear where we were last week, signaling sentiment recovery shift. Analyst Lucas notes accumulation from mid-sized wallets for favorable fundamental support, sustained momentum. Critical resistance 120k. We'll look into what resistance we find critical in the next few minutes. Bitcoin now above bull market support band. Technicians target 118, 120 retest after weekly close. And we got some news as well from Empty Gox. Remember that this particular topic is attracting a lot of thought and fear, not just this cycle, but many cycles before. Empty Gox extends repayment deadline to October 2026. That's 35,000 BTC, $4 billion that remains locked. And this is easing the sell pressure fears. So that is why it's bullish, because everybody's all the time speculating when is it gonna hit the markets, and a push into October 2026 definitely sounds good. Jesse is saying confirm Bitcoin's 3-week chart close with a bearish engulfing candle, and I don't see why people need to be coming up with so many weird time frames. If you look at the 2.58 daily chart, you can see that there is a candle doing this and that, and it feels a lot like forcing it. Sure, it looks scary on the 3-week chart, but then if you go to the 5-week chart or the 11.5, it looks bullish. So what? You cannot be just manipulating the time frames so weird just so you can bring your narrative. Stick to standard time frames, guys, and see if something pops up there. Patterns aren't 100% accurate, but the likelihood of a longer-term correction is rising. 2 of 4 short-term targets and 1 of 4 long-term targets have been reached. Yeah, it looks a little bit toppy on the 3-week, on the weekly, and even a bit on the monthly. I had to admit, we've been covering those things, not just against USDT. If you watch this video in here 4 days ago called The Cycle Ending Now, it's not a forecast, it's just a complete unbiased technical analysis of Bitcoin against all the important other assets to understand where we are in this cycle, and you cannot miss it really. Bitcoin long-term timeframe game plan. Watching the pink box for a reaction. Many people are fitting their eyes around this area in here as we get into 120 or slightly below it. Since we took the 114k resistance that we've been talking about, we could be going for what's next. And I remind you, I am not running along at the moment. I do still have my short. I haven't done anything with it. Liquidity still rests above the Monday 13th highs with a 61.8 Fibonacci and a fair value gap calling just above. The reaction here will be crucial to what happens next. Remember that now we have the biggest fair value gap of all the range to the upside. This one is an overlap of a daily with 4 hour, and the top one reaches almost 121. Below the price, we also have a substantial one. We also have an overlap from 115.2 into 111.7. And now below the price, we also have a CME gap. We look into all of that in detail in this video, and I'll give you my take. Bitcoin BTC could soon face profit-taking pressure as the TD sequential flashes a sell signal. I have no idea what is the TD sequential signal. Let me know in the comments if you do. And don't worry, because we have plenty of signals that we need to look, and levels as well. Glassnode is saying that stablecoin supply ratio, the SSR oscillator, continues to sit near cycle lows, indicated ample stablecoin liquidity relative to Bitcoin. Historically, such periods precede stronger bit-side support when market confidence returns. The way I interpret this is that too much money is sitting on cash versus what is sitting on Bitcoin. Therefore, there is some kind of caution that could help reignite the upside. Roman doesn't have a very positive view in this area in here. He's expecting to form a right shoulder on the top area in here and a potential breakdown eventually. I can see that he's pointing out at momentum coming down on RSI, MACD, histogram, and he needs a breakdown below 109 neckline to confirm it. Crypto Science says BTC is printing a hidden RSI bullish divergence on the weekly. The opposite we get in here. I wish bears good luck. Yeah, because this looks like the typical setup that we have when we are testing the previous range on the weekly. It's overlapping a little bit with the previous range, but it puts some wicks to the downside. So now the price needs to complete a double bottom and continue to the upside if it really wants to follow through with the hidden bullish. And Ted is pointing out that over $1 billion in open interest has entered the market just today. And he's begging for people enter in spot as well to make the setup a little bit more healthy. Remember that when people uses open interest and leverage, those are speculators, and eventually you need to be fearing whether they're going to be taking profits. Later in the video, when we get into high block capital, I'm going to show you how much they are taking profits, how many longs are out of the way now, putting the move in risk. Risk of what? Risk of maybe a mild pullback into the CME gap, or potentially deeper. We don't know. Let's look at the questions of my community. Remember that you can be part of these questions on every BTC video, along with other perks if you join my Patreon community. Any tier is enough to be part of this. Tradox says, just waiting for your BTC entry. Is there any resistance stopping us from grabbing the fair value gap at 116k up? And we look into support and resistance on the RSI next. Javier says BTC still has a chance to go below 100k in this cycle about to end, because BTC dominance, it's about to explode. The question though, if upward or downwards. When it comes to BTC dominance, I'm going to cover that in the altcoins video separately. Remember, I don't know if the cycle is about to end. There's always the chance that it can continue. All we have done in the past videos is assess the likelihood of ending based on past performance, which is incredibly high because it's ticking every single box, but that doesn't guarantee that it won't break the model and do something different. We need to be always open for that. And the way I do that is I hold my short with the stop loss at 120.5. If we go beyond that level and I get stopped out, fair enough. Let the price do whatever it wants to do, but not at the cost of me not taking profits. Because even if I get stopped out there, I can still take profits. short-term market structure since October 17th. I'm assuming that that is short-term, has changed officially now, but looking at trend lines, it could still be a revenge rally. Which one are you leaning towards, final capitulation or breakout? And it's a very tricky situation at the moment because I feel like there is an ongoing market manipulation to get all assets to go as high as possible, and particularly the manipulation is to both ends. First, they introduce the tariffs, they make them look like the worst thing is about to impact the market, and when they cannot push the market lower and take more profits from those shorts, then they reverse and they put everything they have on the table to make it look like the best comeback bullish in crypto. The question is, are they going to rug pull that too once they realize they cannot push it any higher either? Once we do the general markets video, you're going to understand how many things we have on the table. And we're talking about big things like potentially quantitative easing, rate cuts, single or double, gold potentially topping and moving some of those funds flowing into other assets, which is super bullish as well. You mentioned the 115.7 neckline last week. Now that we are back at that level, could you go into more detail about and explain what you're looking for? Yep, I'll look into that target. We'll mention the technical target and all of that. When it comes to a BTC entry, I guess you're meaning a long one because we already are in a short. I'm sure that this week there should be an opportunity to enter at a reduced risk, hopefully crossing fingers, but the trader I think I am is not chasing longs or forcing them, it's just letting the opportunity come to me. We need to act like a lion, just waiting there until the prey falls in the trap, rather than running out of breath because we are chasing and chasing. That is not the type of trade we're looking for. And I can see people are already browsing all the charts from my Telegram group for free. The link is in the description if you want to have a look. This includes general assets, altcoins, and Bitcoin. What's going on with the open interest aggregated across all the exchanges? If you remember, in one of the tweets, someone was looking for a head and shoulder and for the right shoulder formation. The aggregated open interest could make that very easy to form if we get a rejection at $37.3 billion. After this double bottom, pushing higher into there, that's the technical target. We go beyond that, let's say we close at $39 or $40 billion, then we are kind of invalidating the head and shoulder. But if we see a rejection and we come back from around this area into the neckline of 32, that could be really scary if that scenario plays out. And October, as you can see, now is sitting in the positive. September closed at 5% and October now is barely at 1%. If you look closely, there is kind of a trend that when you close September in the green, then you get a pretty decent October. We'll see if we can do that. When I get into the CPR levels, I'll tell you if we go nuts now in banana zone, what sort of prices we can reach from there. Now, let's look at this other setup as well. This is the CME that we formed over the weekend, and there is a gap of from 111 to 113.5. That's 2.5K. That's a pretty substantial gap. You can see it right here in price on Binance. The gap starts from 113.465 into 110.829. So we'll be watching that gap, what happens during the week. Just as a reminder, it doesn't need to happen the same thing, but the past week it was all about pretending to close the remaining part of the gap. The beginning of the gap, we closed it immediately. We left some there and we came back to form a double bottom as we approached that. So if we did something similar, maybe it looks like this, like that, and then we come back and we actually close it there, and then from there we push higher. We don't have to do the same. I'm just doing it for graphical purposes. I think there is a good chance that we are going to close it, and we need to keep in mind what happens if we go into 110, 111 there when it comes to the current breakouts that we are doing on the 4-hour. Will they fake out if we have to go that low now to close them, assuming that we stay there for too long as well? Let's have a look at the crypto intelligence dashboard. This is a dashboard that my AI is producing every morning. sitting monitoring 40 crypto YouTube channels, pulling the transcripts and telling me what is the things that are being currently said. Everybody's talking about this area, referring to it as a resistance, 113 to 115K. Many people analyzing Ethereum and Solana and the reasons why there could be further continuation to the upside, and some of the things that represent at the moment some risk, like the banking system stress. These are the topics that are mentioned at the moment the most in many videos. On the Bitcoin status as well, I have it update. We got the breakout in front of the global resistance on the 4-hour. We need to talk about that. We need to talk about the CPR pivots that are currently reclaimed for October. And ignoring these lower gaps sub 100K, now we have the new one at 110.8. And on the daily, we have a new MACD bull cross. And now we have confirmed the double bottom breakout. So let's go into the 4-hour, and as you can see, we had the initial breakout. The layer 1 was in 12th of October. Then we have layer 2 on 18th of October. Here was the area where we started saying we need to expand these lines because there is a little bit of a whipsaw of volatility coming in. That whipsaw killed the shorts, the longs, the shorts, the longs. That was 4 events in a row, and I'm not kidding. And then it finally over the weekend found a direction to do another breakout. So we could say that this is another layer of breakout, but I'm not gonna call it the third because probably the third is somewhere around here in the middle. But we are getting very close to global resistance now. We have it sitting at 84.21 on the 4-hour. So just a little bit, maybe 10 points or less of RSI moving up, and the volatility already also reaching the higher levels of volatility on the 4-hour. This is the shortest term time frame that we can use. We also use the daily and the weekly, and this one is already running out of steam, and it's gonna need probably a swing low at some point. Let's see where is the global resistance. That at the moment is at 119.256. So does that mean that we cannot cross really the resistance of 120? I don't think so, because there is a way for Bitcoin to reach this resistance, see a rejection from momentum, and still pinch and continue higher, and then get into the order block of 123. How can we do that? Well, the momentum can peak without the price peaking. That is the definition of a bearish divergence. So you pinch there, you come back down in here, and when you put this high, you cannot manage to put that new high in here relative to the high there. That is a bearish divergence. And at that point, you start a channel where you start going potentially sideways or slightly bearish on the 4-hour, but that is just a small pullback on the 4-hour, and then the daily can still continue going higher. I'm just trying to set the scene for you to understand what it could happen, just so you don't think that it's impossible to go beyond 120. There is that recipe to achieve it still. Now, notice that we have conquered the biggest pool of liquidity in here. That was the biggest, that was the point of control, and we are sitting above the point of control. We are sitting above the VWAP connected to the previous all-time high, also connected to the all-time high. So we have achieved quite a lot in here, but there is an exception here on this particular structure, which has higher highs and higher lows. The proportions of this move in here is resembling an ABCD potential corrective wave incoming on this harmonic pattern. The specific geometry and proportions of this is saying that it is sitting at a point of weakness, that 116K, that order block there, and these proportions could potentially slow down the move in here. We have this neckline sitting in there that comes from this order block that pushed the price back down into 103.5. So this specific one hasn't broken out to the upside. We have a vacuum in here. That means that if we could close above that, if we can close, for example, one body in between 115.7 and 116.7, so that's a range of 1,000. If we put a candle close there, we get a chance that maybe we pass all this vacuum there very fast. The next resistance is immediately after 121.5. That's not gonna give me a lot of time to really be placing stop losses on my short. That's why it's already protected in the exchange, hoping that the exchange is gonna execute it, of course. But the same speed that you see in here here of these candles moving down, it could come in there with a short squeeze starting to accelerate. Now, if resistance acts as resistance and wins this first arm wrestling, it can push the price also back down into 110 to close the CME gap. So we need to be prepared for potentially seeing the ABCD wave pushing into the CME gap, close that first. That is the area of risk at the moment for longs that are already in a position in a long. And for the shorts, the risk is that this can come in here and then you get this target, guys, which is 130. Let me place this from the neckline and yeah, right there against this wick. Let's hide, maybe it's a little bit shorter there where we managed to get with the collapse. Let's place this right here and it's giving us 129.3. That is the target of all this bullish formation. If we can get a close above that level. Remember, I am not looking to enter on a breakout. That is not my setup. Many people trade breakouts, but if you do trade a breakout, do not study the target. Do not study how much money you're gonna make, what leverage you need to use. Stop. The first thing that you need to study is how to treat the risk management of a breakout like this, which in my opinion doesn't give me great risk to reward, because if this guy turns into a liquidity hunt in here and it only reaches 117 or less and then it comes back below the neckline, it is just literally trapping those longs, crushing them back down into 110, and we don't know if all they want from this is just to go into the CME gap. They might want all the structure to act as a dead cat bounce and look for a new low. So watch out with that risk. That is what I mean. I don't like it. The risk to reward doesn't fulfill my expectation of a good trade. But you are a separate trader. You know how to do your own risk management. I'm sure you know what you're doing. So go for it if you like it. When there is a breakout, I'm usually already allocated or just letting it pass. Why? Because that keeps my win ratio very high. Do I make less? Yeah, but I keep the win ratio very high and I can do all sorts of things thanks to having a good win ratio as well. This is the double bottom on the daily that we were talking about last week. We've been having 1, 2, 3, 4, 5 days in a row in the green as we approach this order block there. The structure on the momentum is still intact. There is nothing broken about this, and we could say that now we have to pivot so we can place some support closer to where the price is. So let me bring in that one. That's gonna be 47.87. So the most immediate support is 111.6. That is the most bullish support, but that is sitting still above the CME gap. So price on the daily needs to go below it, pinch slightly the neckline of 110.4 to completely wipe all the CME gap. Now, support on the green, which if you notice, this used to be like this, and this was a liquidity hand trapping the shorts, right? That one that got reclaimed there. But I moved the line there so we can track what is the new support, which is 35.28 on the daily. The global one is 26.52, and those correspond with 101.8, 54, and 89,812 on the lower end. That's the global support. You can see in here coming in the bullish cross. We already have 2 days in the green in the histogram, and the momentum to the upside. The volatility is picking up, and eventually it's gonna meet with the resistance as well. I forgot to mention the levels of support and resistance on the 4-hour. On the 4-hour, we have this support coming in at 58.79. That is 113.6. Coming only up until there keeps this momentum very healthy still. So despite the fact that that is a pullback already from 116.500 into 113.600, so that is like 3K coming down, that is still just the healthiest move down that we can do. Go beyond this level or come back below it and put candle closes there, and we start talking about the global support of 18, which is currently pointing up but looking in 95. So if it wanted to meet with the price, maybe it can meet slightly below 100K. That is not a forecast. That is just for you to identify on the 4-hour where is your risk. If you cannot identify your risk, or if you don't know what to do with the risk once you identify it, then do not take a trade. It is critical to succeed in trading to know what to do with it. Otherwise, you're just flipping a coin every day and hoping for the best. CPR has been reclaimed on this second attempt. We could say that this was also a failed attempt, this was a failed attempt, and finally on the third, maybe we reclaim it. Then we have the first resistance coming in again, 118 AA0. Second resistance is 123.674, which we have already achieved this month. So if we were to go for a fresh resistance, the third one is 129.619. The third support, which we haven't touched, is 97.543, and it's definitely a number to keep an eye for in case we need to deal with the risk of this becoming a dead cat bounce. If we go beyond 119 and we start getting into the 120, the likelihood of this being a dead cat bounce reduces significantly compared to where we are, because I assume that this is sitting somewhere near a golden pocket. Yeah, from the bottom to this top, all this recovery is entering the golden pocket. This is already bullish, guys. Putting candle closes inside the golden pocket means already a pretty decent recovery that hints towards potentially achieving more. Now, go beyond the 618 and then you are too bullish. If you go beyond 117 in this gray area in here, you're just too close to a full V recovery, and that could bring in easily then a new all-time high. Now, of course, there's always exceptions. You could potentially get something like this and then still come back down. You know, you can put a double top or whatever, but from the point of view of relatively comparing where we are in here versus where we were in here on that resistance, if we stop there, it's bearish. If we stop here, it's already bullish because we have already achieved the golden pocket. If we go beyond the golden pocket, we are just so close to complete liquidating all the shorts that it increases big the likelihood of achieving it. Now, where are we on the weekly? Because we left in here a head and shoulder already confirmed with a body candle breaking down. And last weekend, this is the weekly time frame. That's why I don't want to use the 3 week, which is, you know, just trying to fit your narrative is just disgusting. But this candle is in green, it's not engulfing, and it closed right there at resistance. This candle looks green, it looks promising, but it's not confirmed. We have pretty much 7 days to decide where are we gonna close with this dude. And let's be realistic, this could close here, this could close in here, this could close above support, this could do a long wick to the upside and still end up with a body right here, which will be the worst scenario ever. But let's assess what can we do in here. We are in an area of bearish divergences. We have resistance coming in at 67. Incredible, but just rallying from the RSI 55 on the weekly and meeting with the resistance once again, not even breaking out. That brings in a price of 135.9. It is a moving target, so the slower we going this way, we meet with the line coming also down. That could happen at 125, could happen even lower, depending if we are very slow into the upside. If we do just a single candle, we could meet with 135 this week, because that's too fast for this to come down. So personally, I remain open to the idea of this guy reclaiming this level, but it needs to play the battle and needs to win that battle. Otherwise, this red candle that is bigger than this one, it could win. Remember that in this cycle, we haven't managed to fulfill the full technical target, which was originally 88k. So there is a chance that we are still bull market and we can do another push into resistance at the cost of a new incoming bearish divergence. This is one, this is another one, and if we hit 67 there and we get rejected from there, then we get a third one. You can see the stochastic RSI. If we close at these highs, it could print a bullish cross coming in right there. The MACD not yet there for another bull cross. And the one that everybody's talking about is this green candle that reclaimed somehow the bull market support band and is starting the week from above it. That resembles areas like this or areas like this where you still battle a little bit with it. Notice this one there. Hopefully we're not gonna end up doing that one, because this one conquered it, retest and fail. This one conquered it and came back down 2 weeks below it once again. So it's not very clear that and don't let anybody tell you that because we conquered the bull market support band, we are out of the woods, because you have plenty of examples in this cycle where you reclaim it, and that's not necessarily enough, because once you are below it, take it as we already hit the quicksand. And once you are in this area, you know, things could be a little bit spooky, and you might come back for another test below it before you actually fully conquer it and start an impulsive wave. There is a lot more profit taking at the moment on Ethereum relative to the one I'm seeing on Bitcoin. We're still at 101. I was expecting to see on this wave up a lot of more profit taking on spot. So spot hasn't had yet that big profit taking that will make me get very concerned. Longs are taking all this area in a very speculative way. You can see how many longs in leverage are entering there, just like these waves there. Sometimes you see them taking profits that gets very shallow there and eventually still pushes higher into a short squeeze. So this is a low quality sell signal that is currently appearing based on the amount of shorts and longs that we have. We are above the monthly support on the RSI. That opens the door for another push into 77 RSI on the monthly, which is sitting at 147k. If we end October below support, well, a completely different story. At that point, we need to recalculate in case we have to do a revenge rally like in October in 2021. People are going to say that long-term holders on crypto Twitter are taking profits. Yes, they are, but it's not as significant as these two levels in there, and it's expected to reduce just like in 2021, where you saw less profit taken, but still you enter a bear market. So learn the indicators and what to expect of them. Don't let anybody feed you with a spoon on crypto Twitter saying, oh, long-term holders are taking profits. That means it's the end. That means that you are needing to clean a little bit your timeline from bullshitters, that there's so many. Spot is still an area dominating in here. That is kind of a guarantee, not a guarantee, but some sort of small insurance, consider it, because it could save if you come back down in here. That is acting like a pillar, having more spot dominating rather than futures. And futures has been heavy, so that means spot is coming in and compensating somehow. We are now in an area slightly in the negative, meaning that more shorts are being liquidated. That could be good news. Remember, we want a period not too long of longs being liquidated, and we already started liquidating primarily longs from around 21st of August all the way until here. So we desperately need to start liquidating shorts to keep things balanced. A long period of longs being liquidated without liquidating any shorts is kind of a confirmation of entering into a bear market. The oscillator of futures open interest is now getting very close to the top end in here. That opens the door for looking for shorts. If we get there, we are not there yet. We are at 6-7% and we need to cross beyond 12 to the upside. Recently we were here at -27, and that was giving you permission to take longs. Now we are far from that area there. So if you take a long from here, you're taking an overcrowded long, and you either need to be an expert in breakouts or you need to be a momentum trader and fully understand the principles of that, which are not being covered by myself in this channel. I primarily look for areas where data-driven events are telling me, well, this is a great opportunity to be a contrarian. Less signals, more quality, less trades, less stress, but yeah, you need to learn more. We are in neutral at 51 after spending a couple of days in fear and in extreme fear, and we got confirmed now the warning buy on Serverus. We have an unconfirmed buy signal in here. So before you start jumping into buying like crazy, these signals are not what they are saying at the moment. They depend on where are we in the timing in the cycle. For example, in this area in here, we got plenty of buy signals. If you are waiting for the buy signal, that is a breakout signal and it can fail. You got a buy here, fail, buy, fail, buy, fail. Eventually you are on a buy that is the right one. That's why I prefer the warning buy in the bull cycle. I wait for the sell, I wait for getting very close to a warning, and I start looking for a buy in an area where there is blood in the streets. Like on those lows, people were completely scared. That's where I was buying with the permission of a warning buy incoming. Well, now we have the warning buy, but we have two candles going up. So I need the price to come back down here, and then I get the full permission to look for longs. Yeah, we are very methodic, very disciplined, and it shouldn't be a surprise to you why we are in this strike of wins. 130 is the liquidity that I can see in this chart that is telling me, well, maybe we are going for that, because these ones so far in here, they are just peanuts. Below, there is almost nothing. We already liquidated all the shorts on the way up. So either this is a dead cat bounce and it wants to go really for 97 or 100K, that is sitting right there, which is slightly less than what we have at 130. Definitely looks like more. So I think here is a matter of deciding how to trade this, as the more market neutral that we can be in here, the better, because we really don't know which one is going to get hit first. So if we go for 130 in here, I will be keen to re-enter on a short, definitely, because at 125, I will have already taken profits here, and I will assume that if we are already here, probably market maker will want to take that too, in which case, yeah, I wait for a short from higher to re-enter. Now, if this comes back and it visits 100 or 97, I'm very interested to enter in a long. At that point, we will have complete A, B, and C wave down, and I will be looking whether we're going to stop at the Fibonacci 1 or the golden pocket on the lower end. Really, market maker now needs to accomplish a lot more. We have another double bottom. This is the 116 that we were talking about in the beginning of the video. We need to break that neckline, and we need to use all of this from the neckline to get us, let's see how high we can get there. We can get into that liquidity of 130, as I mentioned before. So it is doable. The setup is there. It can fail, of course, but no one can tell you that it's impossible to reach 130 because the technical target is there. Can we get 135? Potentially, but let's wait and see if we can first get here, and let's see what happens to this liquidity if we get there, because I will suspect that it's gonna get bigger. Shorts are gonna enter like crazy. There is liquidity substantial up until 141. After that, it starts declining. On the lower end, if this fails, yeah, it can come back for 95 or these buckets that are here with a small lower low. Slightly below 90 is where we are seeing now the biggest bucket of the past 3 months. But hey, this, if we aggregate all of that together up until 140, probably is more than just going into 88, because it's very concentrated there at the 90 to 95. 30 days has the biggest liquidity in a single spot at 109. That is slightly below the CME gap. So if we go for CME gap, hopefully we take this one. Hopefully we take 106.5 as well. If not, if we want to go straight into upside, we have the biggest at 123,700. There's been tons of shorts liquidated overnight. There's been some shorting coming in at 116. You can see in there, I ignore if that got filled or not just by looking at far charts. That's impossible to tell, but you can see that they were trying to hold it at 114, trying to hold it at 116, and price is still there insisting to break that level. We'll see if it can happen. There's not a lot of support on the lower end. Brownwells continue to be involved there, and purples have been also involved, which means something positive. They got bullish, they FOMO into this one on Monday, thanks to all the things that are being said that are bullish in general markets. We have that resistance still at 116. That's 3K sitting on Binance, holding that level. Let's have a look. It's right here. It probably already got filled. Let's drop this to the 1 minute. I'm not sure it got filled. Maybe we had some liquidity at 116 that got hit there, then it came back, and then it re-entered at 115.9. You can see that they are kind of chasing, trying to short this thing on the 1 minute time frame. There's a lot of noise, and there are some other levels that they want to also short. They want to short 120.9, and then there are other significant levels as we approach 130. Support has been moved down from 103, 104 back down into 193k, interestingly. But you can see that probably we're gonna see the bid versus ask ratio lean more towards the ask. But as I'm saying this got just moved back down into 115, 114.5. So something just changed that they are now defending the price. There has been a big flip as I'm looking at the charts. Now, let's look at high ball capital. Let's see if we can find some other alpha in here. This one to me is the one worrying for the longs, because you can see it print bottoming patterns in here. That was a bottom. This was a bottom as well. That means that we are over 70% longs and they help with bottoms, but now they're pulling out of the trade. If they go below this blue line there, that's the one I'm tracking that calls for potential local tops. You can see it in there. It's not always gonna play out, but being below 45 starts being a bit scary to stay or to enter in a long. The order book is very thin today. There's a lot of defense between 0.5%, 1 to 2, 2 to 5, 5 to 10, and there is a lot of support from 10% to 20 and 20 to infinite. You can see the percentiles are on the lower end. Maybe high block capital has an update like we just saw in Market Monkey terminal, which has flipped again to 116. You can see there is a lot of spoofing going on in the order book this morning. So let's ignore that noise for now. Let's focus on other things that are not necessarily going to change every second. The delta now is 487,000, which is very heavy, affecting the longs, and the open interest on this end shows two levels of 600 million that just entered in here. The CME gap is slightly below that. So these guys are profit takers. They are speculating on price moving up, but they are putting themselves into a trap because they're all together and just a few of them that close the trade. That's going to attract the price into 111. It's just too many hundreds of $1 million together. 661 here and 553. So that's over 1 billion that just enter at 111,000. Big alpha that could attract the price back down. If not below 113.6, well, then into the full yellow area in there. If we go there, remember that last week we didn't close the gap immediately, which was sitting at 107. We just came back down there and then we did it later around the 22nd of October. So I think we are in a very interesting situation. I will probably monitor the CME gap. Now guys, I'm going to record a summary and send it in a separate video. That's going to be a 2 to 3 minute summary that includes everything that I'm thinking about entering along, what to do with my short and all of that. You can join my YouTube or Patreon membership to get access to those, or just wait and watch them later once they become public videos. Thanks so much for watching. Hit the like, subscribe, write down a comment down below, and I'll see you in the next one. Bye bye.